we will have our panel on venture capital investment trends. Please give them a round of applause to our distinguished panelists. I'll call them up. Mr. Edwin Mark, Principal at Burda Principal Investments. Ms. Cai Zhijing, Market Strategy, Investments. Mr. Michael Huang, Chairman of Big Bang Angels. Mr. Steve Toso, CEO and founder of Wholesale Investor. And Ms. Ong Qianning, Head of Business Development at Hatcher.
Okay, thank you. All right, welcome ladies and gentlemen. So thank to all those that we nicely come back after lunch. Always appreciate that as an event organizer. So as a starting point, I love doing, this is my favorite panel session to host. I love doing the venture capital investment trends because what I love about doing interviews with VCs is effectively they have a fantastic helicopter view. As a business builder, as an operator, you get sort of siloed into the area that you're building in. So you have deep insights into what you're doing. But because they come across literally hundreds and thousands of deals per year, and they're also seeing what's gaining traction and what's not, they have an incredible perspective that we just cannot get on a day-to-day basis. So really appreciate you all. And we've got different ranges of investors in this. So really appreciate you all participating. So as a starting point, could we just go and give a bit of an introduction to who you are and who you work for?
Yeah, so Edwin here from Burda Principal Investments. I've kind of been with the organization for about 6.5 years now. We've got a small team of 6 of us that's actually based here in Singapore, predominantly focusing on growth stage direct investments. So we're fairly sector agnostic, but looking to deploy capital anywhere between Series A and Series C rounds. Geographically, we've spent a lot of time in the last 7 years looking at Southeast Asia. But early last year, and that was kind of how I met Steve, we started exploring Australia as an investment market as well. But that's kind of us in a short nutshell.
Hi, everyone. My name is Tianning and I'm from Hatcher. So I head up the business development team here, and we are essentially a VC fund. In terms of how we actually approach, that's quite unique because we actually apply AI's machine learning algorithms to all the analysis that we do. We try to invest in over 500 of these VC companies. We're currently invested in over 250, predominantly focusing on seed stage, pre-series A or earlier actually. We also have a fintech platform that actually helps us with this whole analysis and algorithm. So it's very interesting in terms of how we kind of marry both VCs and AI together in this space. I guess I'll talk more about it, as we go along in the panel, but that's it from me.
Michael?
Thank you for having me. I'm the chairman of Big Bang, which is a 10-year-old accelerator, micro VC, as well as I have another entity, the Big Bang Ventures in Korea. Even last year, I incorporated a new company, Angel Lounge, which is a service company for the angel investors. Because I'm the 10-year experienced angel investors in Korea, few in Singapore, as well as even I'm trying to reach out to some European companies in Germany. Recently, we are more focusing on deep techs, such as AI, healthcare, few therapeutic bio, few the agri-tech, as well as sustainability solutions. Thank you.
Hi everyone, thank you for having me here today. My name is Zhijing. I'm part of the market strategic investment team at Citi. I've been at Citi for 16 years now, most recently in this role. So we outsource innovation into the bank, and where it makes sense, take a small minority equity stake to kind of just cement that partnership. So I'm part of a global team that's been around for about 15 to 20 years. We've invested in over 100 companies over the years, mainly focusing on the early stage investments.
Thanks, Eugene. So I'll start with you, Edwin. So obviously from your perspective, can you share some insights just into the current focus and investment strategy for you guys?
Yeah, sure. So I think as I mentioned earlier, geographically, we're kind of looking across Southeast Asia and Australia. I think over the years, we've always been a bit more opportunistic in terms of the verticals and sectors that are coming across. Historically, we've invested anywhere between Series A to C, but I guess what is quite interesting in the last maybe 12 months has been a lot of these growth stage opportunities have pretty much dried up in this part of the world, right? Australia may be a little bit different, but We're starting to see a lot more Series A companies coming to the pipeline. At the same time, also a lot more later stage opportunities that are post-Series C. I guess one of the big things that's been happening has been the chatter around secondary opportunities in Southeast Asia in particular. And I think historically we haven't done a lot of that or even none of that, but it's something that, from a valuation and liquidity perspective for us is becoming a little bit more interesting now, where we are looking at opportunities where you're 2-3 years away from some form of liquidity in the market. But these are businesses that have some form of category leadership. They're still growing top line. They're working hard towards profitability. So I'd say quite a few pockets of things that we're looking at, but I'd say those are the few things that are a bit more interesting for us right now.
Is there any verticals that you can sort of specify which you think are of interest to you guys for the next sort of 12 to 24 months?
So I would say that really depends heavily on specific markets that we're looking at, and I can explain why. I think one of the big reasons that we decided to sort of go over to Australia early last year and start looking at market, it's clearly the track record of Australian B2B SaaS businesses that have actually gone outside of Australia, right? And I think Canva is obviously the big name there in that. So I'd say for Australia and maybe Vietnam, I would say focus is a bit more on B2B SaaS given the strength of the talent and tech talent there. But sort of then circling back to Southeast Asia in perhaps markets like Philippines and Indonesia, I think we still have a very strong focus on, I would say 2 or 3 things, such as Fintech in particular, or anything to do with broadly e-commerce, right? Where as a standalone category, these are businesses which are large enough, generally speaking, for us to actually invest and look at as a growth stage investor.
I was going to say, I think Loyalty Now would love to have a chat with you outside.
Yeah, I was actually speaking with Chris just now, so we're connected.
Thinking, geez, I should have done an introduction for you. Sorry, that's my brain. I'm a natural matchmaker. Zijin, just from your side, obviously you guys make strategic investments. So for you, what's your, obviously a lot of things have changed over the last 2 years. How has your criteria changed, and what is your criteria now for the opportunities that you're looking to invest into?
So for ourselves, we are first and foremost strategic investors. So the commercial use case for Citibank capital markets, so capital markets meaning equities, commodities, FX, interest rates, etc., that is the key for us in making any investments. Obviously, we do still look for a strong management team, whether they have a differentiating technology or business model or something unique, USP. But at the end of the day, having that strategic partnership is one of the main things that we look for that has been consistent in our investment philosophy since inception and will continue to be the case moving forward.
And within that, like what I asked Edwin, is there any verticals, obviously there's a fintech element, is there any sort of breakdown of other verticals within fintech which are of most interest? Yeah,
maybe I could just clarify a little bit here, right? So we're not specifically looking at only fintechs, depending on how you. No. I mean, I think it depends on how you define fintech, right? So if you define fintech as anyone who's serving the financial industry, then yes, we are looking at fintech. But I think in this part of the world, in Asia, there tends to be association of fintechs being servicing the retail or consumer business. For ourselves, we're looking more at the B2B space. We do also invest in enabling technologies that are potentially classified as SaaS companies, whatever it is you call them, right? So all of this would be covered. In Asia, I think they're still looking mostly at KYC or payments and lending, but I think what we're seeing change is potentially the format that it comes in. So taking lending as an example, revenue-based financing would be roughly a 3 to 4 billion kind of a industry in the US. But in Asia, I think it's still fairly nascent. We're still seeing a few companies, startups starting to do this, but it's nowhere near to that scale and size. So that's kind of how I see that shift. In Asia, we also tend to be a little bit of a follower, right, to the US. So for example, Qatar's been a market leader in the ESOP and cap table management space for a long time, but there hasn't been any very strong player in Asia until recently. One of our portfolio company, Capital, is doing so in India, for example. So there tends to be a little bit of that lag, I think, in Asia.
Interesting. And Michael, from your side, obviously, you mentioned about the Korean angle. You guys have invested in over 130 companies. So how has the last 2 years changed, firstly, your perspective on startup investing? And then what are the sectors of or areas of opportunity you've defined as your key targets for the next 2 years?
As an angel investor, 2012 I've started my first angel investment in Korea. In that time, Honestly speaking, there was nothing in terms of startups in Korea. But luckily, I got a first exit case by investing into the company called Legend Comics, which made 8-0 multiply return to me. In that time, it was a hobby as a professor.
And suddenly you were a genius.
Luckily, I got a great friend who is a CTO of Legend Comics. Even he was one of my angel friends. That's the big lucky for me. But recently, I don't want to invest into this kind of a content startups or e-commerce startup in Korea anymore. Even I wanted to share a little bit about the Big Banges. Big Banges is technically the Singapore's company because I'm the holding company in Singapore, and Big Banges is about 90% of share is owned by the Singapore holding companies. I wanted to be the cross-border venture capitalist. That's the reason I started looking the opportunity in here. How could I bring the Korean tech companies to here? In that time, 2016, Singapore government is pushing the three kind of different themes. One theme is healthcare, sort of bio, healthcare, medical things. The other one is agri-tech. You may know that, 2016, 2017. Last one is smart city things. Recently, we are more focusing on these three themes because of Singapore. I wanted to bring the real tech companies from Korea side to here. But let me add one last question. Finally, I failed in here because the market. There is not enough client who buy the sort of a pricey solution from the Korea. That's the reason recently I'm moving to the MENA area. Yeah, let's add another story, another question.
So that's Singapore's next competition is the Middle East, because it seems so many people that are raising capital want to go to the Middle East to raise. So Q, I'll ask you a slightly different question. And one of the things, obviously, we've got a long-standing relationship with Hatcher Plus, and there's so many companies now that are looking at utilizing AI inside their business. And funny enough, I was having a chat with our previous panelist, Hui Jie, and he actually does a lot of tech development. He says he's surprised about the lack of AI companies that he's seeing at the moment, you know, given how much hype there is in AI. But for you guys, how have you guys utilized AI into the actual product of Hatcher Plus, given that you are a VC yourself, you are a fund, and you are investing into accelerators?
Yeah, no, that's a great question, because for Hatcher, the way that we approach VC investing, it's extremely different. We have created a platform called FAST to actually help us with not only sourcing the deals, but managing the deals and democratizing, these LP access into the funds. But each of these companies that come to our FAST platform before we invest has to go through an AI algorithm system. So in this entire database that we have over 560,000 companies that we have been receiving them not only through direct founders applying through this platform, but also from accelerators. So we actually work with the top 20 accelerators in the entire world. They are funneling the deal flow inside our system as well. So on top of that, we're also monitoring over 2 billion transactions that's happening in the market. Based on all of this data, we're actually applying a very wholesome description of each of the startup that comes to us based on the financials, based on the descriptions, and then we actually ascribe a score out of that. So we're utilizing this not really as a way to make a yes/no decision, but more to furnish your existing analysis. So a lot of family office, a lot of people that we're speaking to can also use this platform to assist them. So that's the way that we incorporate AI into our system in order to help manage. And earlier I mentioned to Steve that we have invested in over 250 companies. This is actually only managed by one person in our company because we are really using this entire platform to accelerate, to really act as a accelerator to reduce all the administrative burden away from helping us do this analysis there. So that's how we're actually investing in all of these different companies at such a fast rate. I think on average, we invest in 1 or 2 companies every week, and we're trying to do over 500 by the end of this year.
Brilliant, thank you. Now, Edwin, this is something that I know we sort of debated this when we caught up in Sydney, and I thought this is a great panel session question. You invest into B2B companies, as you mentioned, and B2B has been a tough area for the last couple of years, especially sort of startup B2Bs that were selling to other startup B2B companies because they had sort of declining staff and so forth. The question I have for you is what's your vision for the future B2B startup, and what is your expectations for what that time frame should be, or what that Series A and Series B should look like to when they actually get to profitability, and how has that changed in the last 12 months? 3 questions for you, all in one.
Yeah, so I mean, we don't strictly look at B2B, right? But maybe just to kind of touch on questions 2 and 3 first, because I think that's suddenly been extremely in every single conversation in the region. That's basically high on the list to talk about, right? I think every company is working towards profitability at the moment. I think for me, it's more a question of at what cost, right? Much as every investor, particularly at the growth and later stages, wants to see profitability, I feel like a lot of that narrative has been stretched to the extreme, to the extent we meet seed and Series A founders, and at that point they're pushing super hard for profitability, right? Which kind of defeats the whole purpose of venture capital in the very first place, right? I think for as well, the last 7 years, the fundamental belief has always been we don't need to see profitability in a business at Series B or Series C stages. I think what you want to see is unit economics profitability, right? And because of that, with every single transaction on order, you are always making some form of money. And basically, if you scale that, I don't know, over 10, 20x, then that gets you to net profitability as a company. So I think for me, it's good to see that change in narrative in the ecosystem, but sometimes I just fear it's being stretched all the way to the extreme, which then for early stage founders, you actually do have a realistic chance at succeeding as a business, but because you're trying so hard to get to profitability, you're actually reducing your chances of building a large enough business, right?
Doesn't really impact anyone on this stage, but you brought up a really good point that if every company is really trying to push towards going to profitability, then what is the point of VC? I suppose the next question I have for you is, what is the future of VC if in the companies we're building, we're utilizing low and no code solutions, we're utilizing AI. As a B2B business, you can access data at any single person, any single company, any single CEO that you want to do that, and you can scale the outreach to that. So then what should the actual future fundraising rounds of companies look like going forward? And then how, I suppose it doesn't impact you, but then what are the big sort of funds, how do the big funds compete with sort of smaller, more agile investment groups like you guys?
Yeah, I think if we look at how funds have evolved in, I guess, Southeast Asia in recent years, there's certainly been, just as with startups, right? Everyone's been trying to scale up their AUM. I think for me, my fundamental belief is, platform businesses, again, just as with startups, will win. And I think, the larger fund managers who are multi-asset managers will continue to do quite well in terms of how they want to choose to deploy capital in pockets of opportunities. And either that or I think the smaller funds, right? And perhaps even the fund managers who've not even set up their funds. I think we're starting to see in the Southeast Asian context, operator-led funds, solo GP funds. I think that trend has already been happening in Europe and in the US, but I think it's starting a little bit here in Southeast Asia. I think those are perhaps fund managers who would think about running a venture business much more differently compared to the fund managers that have been around over the last 6, 7, or 8 years, right?
Yeah, that operator-led fund is also a common trend we're seeing in Australia as well. It's funny, the transition starts out as business owner, then angel, and then sort of building out their own fund. Now, Zijin, my question for you, the area of fintech, and sorry, I know you said that this is specific to the fintech part, and I know it's got a broad definition. It's sort of gone off it had a big spotlight on it, going sort of through 2018, right through COVID, etc. And then it feels like that spotlight went off over the last sort of couple of years. There's still interest in there, but it's not getting the same sort of media attention or market attention that it was beforehand. My question to you is, what are the top 3 themes that you're seeing in the the broad fintech area that investors should be focusing on over the next sort of 3 to 5 years?
I think quite similar to what I mentioned earlier, right? At least in this part of the world, the problem statements, we started solving the problem statements, but I don't think that we've quite gotten there yet. The formats are changing. And part of the reason why fintech's kind of been overshadowed in the last 3 years is because of AI, Gen AI, and all of that happening.
And potential of recession, that was the...
I mean, that as well, but I mean, I assume we're leaving the macroeconomics out of this. But, you know, actually, AI has the potential to significantly impact the finance industry as well. So in essence, I mean, the way we're kind of looking at it from an investment perspective, we're not so much focusing on, let's say, like the foundational models or the hardware, because those are already pretty much covered by your large tech companies. But we do look at application layers. And maybe I could give an example. Let's say in the speech-to-text solution providers, with the emergence of LLMs, that has radically changed the cost structure for such solutions. And we're going to see that continue to happen in other parts of, I would say, service providers to the finance industry, maybe put it that way. And in fact, you know, like, for example, with the AI Copilot, that has really leveled the playing field for a lot of the engineers as well, because they're now able to do their job a lot more efficiently, for example, right? And all of that will have carry-on effects to the finance industry as well. So we're watching the space very closely.
Are you seeing sort of AI solutions or LLM solutions specifically for the finance area sort of starting to come through yet, or is that too early?
Again, I think it could be fairly broad, but also have a finance application, right? So what I just talked about, you know, speech-to-text transcription, that has application across finance, telco, insurance, whatever industries, right? But we also look at it, for example, in the capital market space, because we want to look at how has the conversation's been going, what are the trades that we have missed, what are the trades that we won on, how do we do analytics on them. We need to have that. We need to first have that data. So I would say it's more generic, but also with a finance application.
Interesting. And Michael, for you, you know, you're effectively across Asia, and your investments have been across AI, healthcare, and agtech. What are the key application layers that you're focused on, and where do you expect to see outsized returns for investors?
Absolutely, I believe that there are a bunch of AI technology-based company coming from the Korea side, because the two things we need to build an AI company. One thing is absolutely talent. The other thing is, more important thing is data. Which means if you wanted to invest into some AI companies, the first question to them is simple. Where could you get the data? And second question is, could you trust it, the data itself? Even some country, I don't want to call it some country, but some country, their investors don't believe it, their hospital's data. I'm not saying, they are saying. The point is that at least Korean hospitals have a trustable data. Trustable by ourselves, trustable by ourselves. Which means that based on this kind of hospital's data, we could build the AI-based medical diagnostic solution company. I don't believe there are a bunch of countries where this kind of AI-based diagnostic solution company could build. I believe this kind of, it's not about the LLM for the infrastructure for AI companies. Absolutely, US is only country where this kind of core technology of AI company could build, right? But in Korea, we are not the great country for the building this kind of core technology itself. We are more like the hitter, right? Fighter, using our data, our talent, to build more applications. That's the reason we are more focusing on AI-based, sort of a little bit not too deep tech. Sometimes AI drug discovery solution company, AI-based medical diagnostic solution company, even the AI-based the smart farm management solution company, something like that. That's my kind of a focusing area in terms of application side.
And for you, Q, like obviously Hatcher Plus, you mentioned they invest into 250 companies sort of per year. When I first met John, I'll give context, I was really surprised. He mentioned to me that in his portfolio, obviously through the different accelerators, one of the best performing accelerators was actually a fashion tech accelerator out of Milan. And I was like, I found that super interesting because you think about all the different portfolios they would have, that was sort of a high performing one. For you, what do you see now as some of the trends inside the portfolio companies of Hatcher Plus?
Yep. So for Hatcher, when we invest, it's pretty agnostic in terms of the different verticals that we're seeing out there. However, we are seeing kind of a trend towards specific areas. And let me talk about tech as a whole. So, they say that tech always have different waves. So I'd say that the first wave is hardware. The second wave is then Internet of Things. Third wave is, smartphones, cloud computing. And the fourth wave is AI. And the thing about AI is that it encapsulates so many things. It's not just about ChatGPT, right? It's about, just to give you a concrete example, and it's about a cement firm. So they actually use AI in order to increase the efficiency, operational efficiency of how they operate, of how they manufacture it. And also, once they actually build the cement, it actually is supposed to absorb carbon dioxide in the air. So while you can say that that's a manufacturing construction kind of remit, it also incorporates an element of AI. So a lot of the companies that we're seeing in our portfolio actually encapsulates a certain degree, a certain touch of AI. So I think that's very interesting because a lot of the companies that I'm seeing right now, especially for this year, will have this hint there. And it's not just beyond your typical chatbots and robots out there. So it's always an element of mixture out there. So I think it's extremely interesting because once you dig a bit deeper, once you see inside the revenue models, what encapsulates that. So a lot of the times it's a combination of all of these different factors. And the underlying theme is indeed AI, and it's kind of taking over this. So I thought that was pretty interesting when I tried to see through it.
I love all the different uses of AI and also software. So Edwin, now I just realised we've only got sort of just 6 minutes left for our panel. So I'm going to ask you 2 in 1 again, because I know you like the double up questions. So the first one is scaling is hard, right, for B2B. For all companies, the scaling part is a critical part, and obviously you're patient and supportive in that process. The question I'd have is, in your portfolio companies or even the companies you come across, what have been some of the keys that you've seen in what the successful companies are doing from the scaling side, how they've been able to achieve their unit metrics, that basically put them in the right direction? And then the second part is, how do you support them in that journey?
Yeah, so I think we have European offices, so I think we can paint a picture that is, I wouldn't say global, but across Southeast Asia and Europe, right? And if we look across the portfolio companies that we have and businesses which are still growing and scaling fairly quickly, even at their size, I would say one, they're playing in markets which as a standalone, it's extremely huge, right? I think that has always been fundamental. You need to pick a large enough market. Otherwise, you're perpetually fighting against your own customers. I think 2, going back to the earlier discussion we had, the fastest growing companies in our portfolio are actually the ones which are, funny enough, already getting close to profitability or profitable, right? And I think that goes back to the whole point I made about narratives. If your unit economics are bad, your board is going to ask you to cut back on acquisition spend whatsoever, right? So you basically can't scale the business because you haven't found a formula that works for you. Conversely, the companies that we have that are doing well and are still growing, they know that every dollar that they put into that acquisition spend is going to return a fairly defined return, right, for them. So I think those are kind of the 2 things that we've noticed, in that the higher performing companies continue to do really, really well. Whereas the ones that have found issues with market size whatsoever continue to struggle to some extent, right, in terms of being able to scale the business beyond what they are now.
Makes sense. And Zijin, just for you, obviously, I'd love to understand, and this is the part where I love to understand what are the challenges that you're observing, and then how are you supporting those portfolio companies sort of, coming over? Because I said, everyone's experience, like, the best way, when I mentioned at the start of today, when I talk about the founder sentiment, that founders feel beaten up, bruised, and all that sort of stuff in their sort of move to profitability, typically I find that your shareholders are sometimes they can be your worst enemy, but also your best friends in going through that transition. So love to understand like some of the challenges that you've observed in portfolio companies, and also how they've turned it around and how you sort of support typically in that sort of turnaround process, or just in the continued success.
We're definitely hoping and aiming to be the best friends. I think because we're in Asia and it's a very fragmented market, when you're trying to scale into a new market, that could be a real challenge. What we have done, and that's kind of where we come into play, right? Because that's where we have the global footprint. What we have done for one of our portfolio companies, who is a market leader in their home country, is that when they're trying to look to scale in the region to just diversify their revenues, we've actually brought in our APAC heads to give them a laydown of the landscape. You know, what are the competition that you're going to find in each of these countries, the regulation, the compliance requirements, etc., etc. If you want to start, where do you think you should start with first, with each product, etc. So I think that the feedback we got from that was that it was really valuable input, because if you don't have that vintage, that view, that perspective from an APAC role, it's difficult for you to be able to share that with the startup. Yeah, so that's what we try to do for our startups. I'll keep it short, short on time. Yeah.
And Michael, I'd love to ask you the exact same question, because obviously, Zijin and Edwin are sort of going from the perspective they're investing typically in the sort of growth and scaling aspect. You deal at the much more fun end, where it's sort of right at the early stages and anything and everything can go wrong in the journey. How have you sort of helped some of the portfolio companies sort of navigate these last 2 years and then supported them, into this next phase, which effectively to me, I think is one of the most exciting times to ever be in the innovation space?
We are doing the two things. One thing is absolutely as an accelerator, we could leverage the fund from the Korean government. Annually basis, they are putting at least 1 billion to support for the accelerators the program. Just 1 billion to help the startups to their expansion into globally, not about Korean only. This is one thing. The other thing is absolutely early stage startups, they need the people who help the business develop with their potential partners, something like that. It's not just about the selling itself, selling product. It's more designing the business, designing with their clients. That's the reason recently I wanted to start my new company in MENA area to help the Korean startup as a venture studio. Because honestly speaking, Korean people don't want to live in the Dubai for their life,
But the financially ambitious will.
But they need our technology, I believe it, which means that if I could convince startups, okay, transfer the technology itself, building the company in MENA area, even though I'm trying to in Singapore too, building the technology itself, and the regional founders building the company, invest the money, and help them grow. That's the new approach. It's not about the approach of accelerator. That's the reason I call it the venture studio. In MENA area, by utilizing the technology, looks like a CTO. You need to think the technology is CTO from the Korea. But we need to have regional people who make a real result in that countries. That's my kind of a way. Thank you.
And Q, last question for you, because I know we're sort of right on finishing time. What are obviously your platform is used by both VCs and also family offices and fund. What are some of the trends that you're seeing amongst the VCs that are coming to you? What are they looking for? What are their expectations, etc.?
I think in terms of the VC, expectations hasn't really changed in the sense where they're still looking for a lot of support in the space. For us, every time the VC that comes to us, they always need a lot of support, not only from the financial aspect, but also in terms of the management, how they're going to penetrate the market, in terms of how they're going to go to market with or scale up in that sense. So we haven't really seen much of that change in that sense, but we have seen a change in terms of the LPs that comes to the platform, because both sides, and not only the VCs, we do have LPs coming to us. And I mean, the crowd is definitely getting younger and younger. It's not only intergenerational wealth coming where they're passing on third, fourth generation to here. I think that there are more younger people getting rich. A lot of them are crypto guys, for example. They come to us. They come to say, "Hey, I am de-risking into VC. And I'm like, sure.
Imagine that, de-risking into VC.
De-risking into VC. And, I think it's also more accessible because there's a lot of educational pieces out there. There's a lot of democratization. So you're able to actually access, a normal typical entry size is normally 1-2 million, but now you can get in at, from ADDX, for example, you can fractionalize it to at least 1,000. So it's a lot easier to get in. It's a lot more educational pieces there. So it's a combination between the VCs and LPs that come to us because there has to be a certain size to kind of support them. At the same time, they do need the money to actually funnel them do need the support there. So we haven't really seen that much change on the VC side, but we have seen a lot of changes on the LP side, I would say. From
I was going to say, this is the most I've ever, in the last 12 months, I've never had so many VCs and private equity firms come and approach us for capital raising. And then likewise, the same with family offices. It's a really weird thing for me where I've got family offices that are clients that are raising money and investing at the same time, but likewise on the VC and PE side. So that concludes our panel session. I'd like to say a big thank you to the panelists for your insights and inputs. That 30 minutes went super quick. I could probably do another hour, but thank you everyone. Much appreciated.